Welcome to Investors Insight, where today's topic is, will the market rally hold? So a lot going on. Markets are under pressure to start the week as the ceasefire deal over the weekend started to kind of fall apart and be shaky. So we want to address the noise around the market, but really focus on some positives. So before I talk about corporate profits as we start earnings season, Ty, talk about the benefits of tax refunds, and then also the market rally back, and then also the Fed.
Yep, as Bobby alluded to, I got a few different topics to cover today. Start with tax refunds. We are, of course, past tax day. It is, we're through April 15th, so we have a good sense of, kind of what happened this year compared to previous years. Consumer tax refund growth surged into April 15th, up 34%. Last week on a year-over-year basis. And that cushion provides us with a little, liquidity for consumers as oil prices have of course spiked and then, since come down a little bit, but still a little elevated. Keep in mind, we will still have a couple more, days that fall in as data is coming in, but 2026 was a big year for individual tax refunds, around $270 billion, considerably more than last year's $225 billion. And the previous years as well. And so, good news that more people are getting refunds. Hopefully, a lot of our clients were part of that and something that, will hopefully, ease the burden of higher oil prices and inflation as we move along. Secondly, we obviously had some market moves this week as there was a, potential ceasefire. And then I know Bobby will get into that a little bit more of how that worked out this weekend. But, the market did rally a little bit. We do have a new support level. Before, our support was around like that 6,200 level on the S&P 500, meaning that was kind of I don't want to say our floor, but that was our way of looking at things and saying if we violated that level and went below it, we would get more, more cautious or more aware of what's going on. So now our new support level is around 6,800, 6,900. So a little bit higher, which is good news and gives us, a little bit of leeway of seeing, the market digest the recent gains. And then lastly, want to just give you a couple dates to keep in mind. On Tuesday, so tomorrow, the Senate Banking Committee will have a hearing on Kevin Warsh's nomination to be the next Fed chair. This is going to be, an important hearing. Previously, a representative said they weren't going to vote until the case against Fed Jay Powell was dropped. So we're looking to see what kind of commentary comes from that. And then the other date to highlight on your calendar is May 16th. That's the goal for Kevin Warsh to be appointed. If he's not appointed by May 16th, it could be a little bit of a fight between President Trump and Fed Chair Jay Powell of who's going to remain the chair until this situation is resolved. If it'll be Jay Powell past May 16th, or if Warsh will go ahead and step in.
Yeah, all great information, Ty. And as I mentioned last week, we have been following valuations very carefully in recent weeks. And the market has been dealing with stretched valuations, the Iranian war, diminishing interest rate cut expectations, and a lot of other distractions right now going on. But we want to take away the noise for a second and focus on what is the key driver of the market, and that is corporate profits. You can see in this chart that profit margins seen in the orange line have been really strong going back to 2010. And the market will be driven primarily by corporate profits, as you can see a direct correlation in this chart between profits in orange and the valuation of the S&P 500 seen in the blue line. In fact, analysts estimate that the index's profit margin will reach 14.18% in first quarter of this year. That's up from 9.64% in the fourth quarter of 2010. So for comparison, the index notched a record profit margin of 14.45% in fourth quarter of last year. So as corporate earnings season starts to pick up, it's important as ever to focus on corporate profit margins. So if profit margins continue to in the current trajectory or even remain flat, then the market will have strong momentum to fight off all the noise of war and the noise of the uncertainty of the cease deal that we saw this past weekend. So corporate profits matter the most, and it's something we're watching carefully here. So again, the market is under some pressure to start the week because of the unknowns around the ceasefire deal. We're watching that carefully. We'll keep you updated. Thanks for watching.